Hey, accounting students, this is your teacher Roy with a video lecture for chapter number 4. And instead of preparing a video for the whole chapter 4, I'm just going to do a walkthrough for the homework assignment for this chapter. And it'll cover the main topic of chapter 4, which is preparing a consolidated worksheet when there's a non-controlling interest for our consolidated group. In previous chapters, the parent corporation had owned 100% of the subsidiary, but that's not the case now here in chapter 4. So we're going to see some new lines on the consolidated worksheet. So the reference you should be using is this page 60 in our ebook. And just like before, we're going to go through all of the different consolidated entries. Remember the SAIDE? So just as a review, let's take a look at them again. So the first entry, S, is to eliminate the stockholders' equity accounts of the subsidiary. In this example in our textbook, it's Pawn Corporation. So debiting the common stock account, debiting any additional paid-in capital of pawn. In the case of the retained earnings, you're not eliminating the retained earnings as the end of the current year. We eliminate the retained earnings at the end of the beginning of the year. Our current year is 2024, so here you can see the date is at the beginning of the year, yeah? Being debited, you're eliminating it. In previous chapters, all of the total debits would be credited to the investment asset account on the books of the parent. But now you can see we don't own 100% of the subsidiary. So we only offset the asset for the amount owned by the parent. But then for the amount owned by the non-controlling interest, the minority interest, here we're setting up a new line. It's really not an account, but a line on that consolidated worksheet called non-controlling interest. This is an equity account that shows up on the consolidated financial statement for the non-controlling interest share of the subs equity accounts as of the beginning of the year. Okay, so that will eliminate the subs equity accounts as the beginning of the year and start to reduce this investment asset and now set up this new controlling equity, non-controlling equity account on the worksheet. Entry A, again, if you remember, is to put in the updated undervalued assets of the sub, keeping in mind we're updating it to the beginning of the year amounts. In this example, again, January 1st, and not updating it to the date of acquisition, which could be many years ago. I believe in this example and in our homework, the acquisition took place 2 years ago. So as of the beginning of the current year, only 1 year has passed. So when we debit these assets, we're updating it for the acquisition value, less 1 year's worth of amortization. Yeah, so we got to keep track of the years that have gone by. And again, the offsetting credits is to reduce the investment asset account on the books of the parent. And again, crediting this new line, really not an account, but a new line on the worksheet for the non-controlling interest. So that's A. And then probably the simplest entry we'll see is to eliminate the earnings on the books of the parent for its share of the sub's earnings. Okay, so we eliminate it with a debit. And again, the offset is to the asset account. Okay, so nothing different here for this chapter. And then D, again, we eliminate the dividends that were declared or paid by the sub. And we'll see there's going to be really a new column on the worksheet to keep the dividends for the non-controlling interest. You would think there would be a separate line here, like we see here for the non-controlling interest. But the way we handle the non-controlling interest share is to set up a new column on the worksheet allocating its share of the dividends coming from the sub. Okay, so that's going to be something new we'll see. Oh, and let me go back to this. I'll tell you what, we'll cover that in the on the next example. And then after D, we have the annual additional amortization or depreciation to be recorded. Again, nothing new over here, like compared to previous chapters. Okay, so this first example here on page 60 deals with a situation when the parent purchases the sub, its percentage share. The parent didn't pay for any additional cost or premium. Here they say no control premium was paid. The stock was trading at of the sub for 975, and that's what the parent bought it at, 975. But our homework problem, our parent has to pay extra over the going price. So the example you should probably be following here on page 60 of our ebook is this one down here, where a control premium is being paid. Again, in this example, which have different amounts in our homework, the amount paid by the parent is $11 per share. But if you were going to purchase on your own stock, here you would have to only pay $9.75, the market price. So the extra being paid by the parent is eventually going to be allocated to probably the goodwill asset. Yeah, the parent share of the subsidiary's goodwill asset. So to take into account that extra being paid, the premium being paid, when you do the adjusting entry A, we have to split up that extra that's being paid. Here called A1 for the identifiable assets we've seen before. But you don't count the goodwill asset because we're going to have a separate goodwill asset being set up for the sub because, again, of that extra premium being paid. Also, we'll have to be able to divide up that goodwill between the parent's share and the non-controlling share. In fact, that's really one of the first questions in the homework assignment. Okay, so use this page 60 as a reference. And again, specifically this example for a control premium being paid by the parent. Now, taking a look at the homework assignment in for chapter 4, this is really problem 25 at the end of the chapter. And it's a difficult problem, especially if you're not using any AI help. So I'm leaving this check my work button unlimited. Yeah, you can enter a dollar amount and check your work right away. Yeah, enter another next dollar amount and check it whether it's correct or not. But what I'm going to do is maybe redo a lot of the calculations required for this homework assignment on a separate spreadsheet. Okay, so I'll kind of copy the numbers here. But let's go over the facts of this homework. Okay, so on January 1st, 2023, Holland, that's our parent, paid $8 a share for this subsidiary, Zealand, and we're acquiring 60,000 shares, and that represents 60% interest. Again, what's new in this chapter 4 is now we don't own 100% of the sub, but we have control, so we now still have to prepare a consolidated financial statement, still prepare a consolidated worksheet. The other 40,000 shares not owned by the parent has a value, trading value of only $6.50, again compared to the $8 that the parent had to pay. So the excess amount, the difference, looks like $1.50 more per share, is the purchase premium that Holland had to pay to acquire control of Zealand. And what's given here in this table, this balance sheet, is Zealand's balance sheet as of the acquisition date. Okay, so um, one of the first things we learned to calculate in the previous chapters was the excess amount paid to eventually allocate to the undervalued assets. So we need to know the book value of Zealand. So that's the common stock, really all of the retained earnings, yeah, or all of the stockholders' equity. Common stock of 100 plus the 160 of retained earnings. And because the value of both what Holland paid and the value of this minority non-controlling interest of 40,000 shares is greater than the 260,000. The excess amount over 260 is the amount we need to allocate to the assets of the assets here of the subsidiary. Okay. So how much do we allocate to those assets? We're told that Zealand's equipment, that's this equipment here, 259,000, is undervalued by 55,000. So we know this 55,000 has to be amortized, in this case, over the next 5 years, reducing the profitability of the company. Also, we have an unrecorded patent worth 285,000. There are patents here for Zealand, but there's one worth 285 that isn't there in the balances of the sub. So we're going to put it in 285 and amortize it over the next 10 years. Now, that doesn't account for all of the excess value, fair value over the book value at the date of acquisition, because the rest of that excess has to be allocated to that goodwill asset. And whenever you don't own 100% of the sub, you're going to have to allocate that goodwill between the controlling interests, that's Holland, and the minority interest, that's the non-controlling interest. Okay, so this is the first two columns of the worksheet, yeah, of numbers. Then we have to foot across to get the total financial, consolidated financial. Okay, so first requirement, compute the amount of goodwill. That's the overall goodwill when Holland bought Zealand. And then in A2, allocate that goodwill between controlling means Holland, and non-controlling is what Holland doesn't own. And then show how Holland in B, show how Holland determined its current year, end of the current year, 2024, investment in Z's account balance. We know on the consolidated financial statement, this investment account is zero because you cannot own yourself, yeah? But on the books of Holland, there should be a balance in an asset account investment in Zealand. So we need to calculate that out. Really, this, let's see, assets, there's 320 right here. How was this calculated? Okay. And then the big problem is to prepare a worksheet consolidating all of these numbers here into a last column way off to the right side for consolidated financial purposes. Okay, so we need to just fill this in here. So goodwill at the time we acquire the sub, and we divide that goodwill, this amount, to Holland and not to Holland. You know? And then in B, this investment in Zealand right here, I think should total this 320,000. So let me copy these numbers into a spreadsheet. So let's see if I can maybe show you, if you don't know how to use Excel. Here's an Excel spreadsheet. So let's say I want to copy, let's copy this, all of the labels here. So I kind of drag just before the first thing I want to copy to a little after the last thing I want to copy. So Control C, and I'll post it right here in this upper, let me go one line down in row 2 here and paste. So the formatting is not the best. So let's see if I can adjust the formatting. I'll widen the column A so it'll accommodate the longest description in this column. It's kind of doubling up in this last row. I'll leave it like that. And then I'll double click here to accommodate the numbers. Double click. And the rows are too wide. So let me just double click on one of these border lines between the row numbers here. That didn't do it. Let's try, I'm gonna do the whole spreadsheet here and double click. Yeah. You can click on this button here in the upper left hand corner to select the whole spreadsheet and double click any one of the border lines between the row numbers. I'm gonna change the font here. It looks like it's a Courier, yeah. So my whole spreadsheet is selected right now by clicking on this. So I'm gonna change the font, make it something more readable. Let's say this one here, yeah. Okay. And let me put in grid lines. I can see the alternating hashing pattern here, but I'll put in grid lines. So also the whole spreadsheet is selected, and the grid line in the drop-down menu, I'll put all the border lines. So it makes it a little bit easier to aligning things across the spreadsheet and the rows going up and down. So what we'll have here is adjusting entries. So let's say debits, and we've learned that debits are recorded as positive numbers, and credits that have to be entered as uh, negative numbers. In fact, our spreadsheet, the reason why I'm not assigning a online Excel spreadsheet is because they're inconsistent in using debits and credits, inconsistent in how they're creating the formulas. Like we were told, we don't enter values in formulas, but they actually do that in the solution. Whenever you enter amounts here in this debit column, you keep it positive. Whenever you enter amounts in this credit column, just like this revenue here, we put it as a negative amount. I believe it may not show up as red, yeah, or it may also show up as a minus if it's a negative. So let's have a new column called non-controlling interest. That's for the percent Holland doesn't own of Zealand. And then we'll have a consolidated total. So for most of the rows, we can just add straight across. But for some rows, like this net income row, you really cannot add straight across because it's actually a footing down. You're totaling down to get it. And it probably should be separated. For example, from sales down to net income, that's our income statement accounts. So I'm going to separate it from the next row here. Yeah. I right click on the row where I want to insert one above and click on insert, yeah, to put a blank row. So income statement, and here is retained earnings statement. So let me separate that from the balance sheet accounts. So assets, and let me separate it from liabilities. So it gives me a little bit more break of how to identify accounts. So we all know that we start off with the income statement first because whatever net income you have here is going to be inserted into the retained earnings statement. And then the ending retained earnings is going to be here in the equity section of the balance sheet. And of course, assets have to equal liabilities plus equity. Otherwise, something is wrong. Let's also, I'm going to add a couple more columns. So remember the SAIDE. I want to identify the numbers in these two columns as one of those letters. So let me insert another column. Yes. Let's see. SAIDE. Although we'll have a A1 and a A2 in our example. Let's see if I can duplicate this column and then include it here. So I'll click on this column and let's see if I control drag it here. That didn't, I see the plus. No, copy and let's try pasting here. Paste. Yeah. And I'll put everything as center alignment. Okay. I'm just double clicking to narrow it down. So what else do I need to copy here in my spreadsheet? Let's copy this balance sheet for Zealand as of the acquisition date. That's January 1st, 2023. This is Zealand's balance sheet as of January 1st, 2023. And I paste it here. Oh, if you have an issue like this, you see everything is in the text in one cell. That probably means I didn't copy the beginning of the table. So let me go back and again, kind of drag before the table and kind of drag all the way after the table. In fact, let me make sure I grab some at the end by copying this next letter here. Copy and paste. Losing my format, but let's make it wider. If I make it too wide, it moves stuff off the screen. Yes, I'll keep it a couple rows here. And again, select the whole spreadsheet and narrow down the columns. And again, apply this formatting to the whole spreadsheet. Okay, so that's the beginning of the acquisition date. Let me get rid of that extra letter I copied. Okay. So let's calculate out the goodwill. That's the first question, yeah? Calculating the goodwill at acquisition. So we need to know the value, the fair value of Zealand at the acquisition date, which is the amount paid by Holland, $8 times 60,000 shares. That accounts for 60% of the value of Zealand and 40,000 shares at a average price of $6.50. The total is the total fair value of Zealand. So let's calculate that out. Let's see. This is Zealand's fair value at January 1st, 2023. So we have, let's see, Holland share and the non-controlling interest share. So we have shares owned, that's 60,000 by Holland and 40,000 not owned by Holland. Of course, the total is 100,000. And the price paid for one share by Holland was $8. And the value of the other 40,000 is 650. Okay, so if I take the 2 here, let's see, let's call this a fair value. Um, take the price and multiply it by the shares. And let me copy the formula down. Instead of using copy and paste, because I'm just below the cell, I want to copy the formula, I want to copy. Control and letter D for down should be able to copy the formula for me. And to take a grand total, didn't work on the online Excel spreadsheet, but here on a separate Excel screen, you can try doing this on Google Sheets, yeah, but the keystrokes are a little bit different. But you know, the standard of spreadsheets is still Excel in industry, in the accounting industry, really any industry. Excel is still the standard. So it's always good to know your Excel commands. Anyway, here is where I want the total to be, holding down my Alt key and just tapping my equal key a couple of times will put the total in for me. This is the fair value of Holland as of the acquisition date. Now we need to compare that to the book value of Holland. Okay, so sorry, not book Holland, but Zealand. Yeah, Zealand's book value, or sometimes this is really just the stockholders' equity of Zealand as of the beginning of the acquisition date. So that would be, let's see, the I'm looking on the well, it's really right here, this balance sheet. The common stock, let's see if I can copy the label here. Common stock equal, I don't have to type, yeah, if I copy the label. Let's move this down one row. And then I'll copy the label below that, down. And I'll copy the value. You notice relative position here to the um, to the right. I'm gonna copy it to the right. I want to copy it to the right. Control R. Yeah. Here, Control D or Control R. Let's put the labels aligned rightward or leftward here. And let's take a subtotal. This is the Zealand's stockholders' equity. Again, as of the same date, yeah, the same date. But let's subtract it from this fair value. Minus. So this 480,000 is not the goodwill paid for Zealand, but this is just the total excess value of all the assets that were undervalued, including goodwill. So what we need to do is back out of this 480,000 the identifiable amounts we're told that were allocated to equipment, that's 55, and to the unrecorded patent of 285. Okay, so let's see if we can take another subtotal. So equipment, this is a long label here, yeah? And patent, again, let me align it to the right. And then the amount, it's not anywhere on this spreadsheet, so I just have to retype the amount. Again, 55 for equipment, 285 for patent. 55, 285 total. And let's put that subtotal here. Am I copying? No, I'm moving it. Yeah. You can cut and paste, but here I'm just gonna drag it over. So this is 340,000 of undervalued equipment and patent costs, yeah, out of this 480. So the rest of the um, costs should be to the rest, taking the difference here, should be allocated to good, I can't spell today, good will. Here's your answer for the first question. Yeah, 140,000. Let's try it. 140,000 and check my work. Let's continue. So now we need to allocate this 140,000 to Holland, the controlling interest, and to not to Holland. Again, the two amounts have to equal 140. So let's go back to my spreadsheet. So now how are we going to allocate this between the two? Would be simple if we can use, let's set up the ownership here. Holland is it 60%? Let me double check my facts again here. Yeah, 60%. And that means the non-controlling interest that Holland doesn't own is 40%. Let me align my labels over the numbers. Yeah, that's right. It would be simple if I just can take 60% of 140 to allocate goodwill to Holland and 40% of 140 to allocate goodwill to the non-controlling interest. And that is what you would do if there was no purchase premium. But in our case, there was a purchase premium. Again, the $8 over the 650. Okay. So to be able to allocate to be able to allocate the goodwill, 140,000 between Holland and the non-controlling interests, we have to do an additional calculation to allocate goodwill to the book value of Z, this assets here, plus the additional amount we're allocating, that's this amount over here, less the liabilities, that's the net book value, and then anything over this 740,000 is the goodwill asset divided up by these two amounts over here. So let me illustrate. Yeah, so this is the net, this is Z, or subsidiaries, net book value as of the acquisition date. Okay, so that's the assets. There's 472,000. I'm not going to put any labels here. Plus the additional undervalued assets, identifiable ones, is 340,000. Less minus the liabilities of Z at the acquisition date total. So this 600,000 is part of this 740,000. And you can see the difference here and here is the goodwill. But again, we got to divide up this between Holland and the non-controlling interests. So the way to do that is this 600,000 is going to be allocated 60% to Holland and 40% to the non-controlling interests. And anything remaining of the value here of these two amounts is the allocation of goodwill between Holland. So let me set up a couple more columns here. So let's see, 600,000 times 60%. Okay, so that's Holland's share. And then 600,000 times 40%. That's the non-controlling interest share. So I take the difference. Holland's share of the goodwill is 120. Let me copy this formula down. And of course, the total has to be equal to the goodwill total, yeah, 140. So here, this is your answer for the next question. This was the answer, of course, for the first question, yeah? So let me enter this and check my work here. 120 and 20. This one here. 120 and 20. And check my work. Okay, so now I don't think I'm going to show you this. I'm going to have you do it on your own. What I will do is this requirement C or here next, and that's this worksheet here, which I've pretty much set up in my spreadsheet here. Yeah, these columns here. So let's go through that SAIDE in that order. Let me stop the video here and I'll continue on this worksheet with a second video. Okay, so make sure you take a look at the second video.